Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the October 28th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we'll go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 16 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, send me an email, steve@tfnn.com. Send it in early if you could. Now, early means during this hour. If you send it overnight, and I know Mike wanted me to look at some instruments, I'm going to have to go back and find that email. Or Mike in Sarasota, if you're listening now, I won't during the first break. Maybe you can just resend that email to me, and I'll look at it. But if I don't get that, I'll go take a look. And see what you wanted to take a look at. In any event, let's just kind of get right to it here. I would love to hear from you in one way, shape, or another. Could be a ping inside the Tiger's Den. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices trading lower. No reason to think that they're not going to continue to trade lower. But we'll go take a look at some short-term signals out here. What needs to take place? First, you've got the Dow off 840, the S&P 101, NASDAQ 100, 387, Russell 41. SOX are down 64, about 3%. The Wilshire's off 1,000 points. That's 3%. So things are looking ugly, and they could certainly get uglier. Gold's off $30, silver down $1.17. That's 5% to the downside. And the only thing moving higher is the U.S. dollar index and U.S. Treasury. So this is the rush, the flight to quality. So this is an important, regardless of whether you're long, you're short, or what have you, it's really important to understand today's signal out here, the message of the markets as I take a look at it. And that is that it's still the U.S. dollar that folks still have confidence in. Now, of course, all you have to really do is take a look around the globe, see the riots in Spain, in London, in France, in Italy, all over the world, Philadelphia. The city of brotherly love doesn't seem to be too much in love over there in any event. So there's lots of craziness going on, but it's still the U.S. So why is that important? Well, it is important because as things get really crazy, so this is what I talk about today's action, but as really crazy overseas out here, this is where we would likely, let's see how the election turns out and everything that goes on there. I'm not referring to which candidate wins out there, although that will certainly have an impact on it. But the point is that the U.S. still could be the place where when everything goes to heck in a handbasket out there. And that's really the important message that you should be looking at today. Okay, off of the soapbox. Now let's go take a look at the short-term time frame charts, and we'll get to the larger view out here. And I'd mentioned the VIX out here, where the spot VIX index today now is above all of its forward futures contracts out there. And it's up $6. And when that tells us that there's going to be a large bounce that's going to unfold out here, and I'll show you the reasons why. It's backwards now, and that doesn't mean that it's today, and doesn't mean that it's tomorrow out here. But we'll take a look at a table or a chart that you can take a look at so that you can try to time it. But on a 30-minute basis in the ES mini, here's one of the things that we know: price for the most part has been. I just guess I expanded it. Been below Stevie's red line. That's the oscillator and change line. That's the first level that price would need to get above in order to suggest there's going to be some kind of counter trend rally out here. So Stevie's red line, the oscillator and change line, I love to teach that to you. Subscribers have a workshop. It's sitting on their members page right now. Now, what we can also see out here is a TD9 count bottom. And then we see following that TD9 count bottom was a bullish engulfing candle. So the real key area for to be watching, and prices below that right now, is 32.75 and a quarter. We're down at we're 32.74. If price closes below that level, again, that level is 32.75.25. Boy, that suggests a strong momentum move to the downside. I don't know where this candle's going to close at 130 out there. If it closes above it, then at least you know that buyers are trying to support this area. But it doesn't mean anything, in my opinion. It doesn't mean anything unless price can close above Stevie's red line. However, there's also a new profile that is in place out here. The top of that profile is 33.04. So there's not going to be any kind of significant rally, short covering, whatever it might be, to the upside unless price closes above 33.04. Right now, that's the current profile. At 2 or 2:30 or 3 o'clock, it might be a different profile that's in place. Stevie's red line, well, that'll keep computing out there, and that's the first level that price would need to get above. So the ES mini trying to form a bottom, but now you can see where the real resistance level is that price would have to get above for there to be anything of significance that would be unfolding out here. Yeah, let's take a look at the NQ. The NQ also trying to form a bottom, or at least it did have a bottoming signal. It had a TD9 count pattern. Let's see if price is below that pattern. And it had wave number 7. That's letter G out here. So, yeah, price is right now trading well below. When I say well below, the number that we'd be looking at out here is 11,202.25, and we're at 11,177. So this is suggesting that price wants to continue to move lower. But look, anything can turn around. All I'm saying is this stage here is the only pattern that I'd be able to write in here would be an A to B equals CD to the downside. So short of that happening, price would really need to close above 11,297. That's the top of the current 30-minute bearish structured profile. But right now, the 30-minute chart for the NQ says more damage to the downside. And it could be a significant more damage to the downside out here. There's no reason for it to stop, at least at this stage of the game. The Dow Equity Future Contract for its 30-minute time frame, it too forming a TD9 count bottom, but that bottom does not appear to be holding. A close below, that's being tested right now, 26,469. Your 26,473 says, I want lower price. The Dow Equity Future Contract, boy, if it could really get its mojo going here, 2 bars above Stevie's red line, 26,558 or so right now. If it could get above that, then its levels of resistance are 26,734, 26,864, then 26,968. So it's got a ton of resistance to the upside. But right now it's below resistance, and that says I want lower price. We go take a look at the Russell 2000. Russell 2000's in a world of its own out here. Doesn't have that same TD9 count patterns that the ES, the NQ, and the YM did out here. In fact, probably there's no pattern out here inside the Russell 2000. Yeah, there's nothing that Stevie has here. So at this stage, this is suggesting that it too wants lower price. So we're about to go to the breakout here. But what's important to know, at least for today's trading out here, is that the short-term signals that are in place appear to be failing, and that says we should see lower prices and could be significant lower prices. We'll take a look at that. We'll take a look at the spot VIX when we get back from this break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So as we take a look at the markets right now, the Dow down 896, S&P is off 109 points. Let's spend a few minutes with the spot volatility index. It generated a couple different signals for us. So the first signal is right now you've got the spot volatility index, so the one-day rate of change greater than 10%. We're at 21.2% right now. So if it closes above 10%, one-day rate of change, then you would expect the same play as yesterday, bounce or bottom. We never know which it is out there, but bounce or bottom. And you'd be looking for some type of pattern in the short-term time frame charts, 30-minute, 60-minute, maybe 120-minute, to give you some type of bottoming signal to then generate a rally signal. So you want to be looking for that overnight. Now, if the spot volatility index, somehow there's a good rally coming into the close today and it closes below a one-day rate of change below plus 10%, then that game is off out there. So that's something that you would be anticipating. That's the first thing. The second thing that you're going to want to watch for is the spot volatility index now is above all of its forward future contracts. So if you take a look at this page out here and you look towards the center bottom of the data panel, you're going to see you've got the November 2020 as far as the spot volatility index contracts through July 2021. You can see right now in the spot we're trading at 40.22. The highest priced spot volatility index is the November contract at 35.65 out here. So when that spot volatility index gets above all of its forward future contracts, it tells you about an impending fairly significant bottom. Now, one where you'd see a real decent counter trend rally. If you take a look at this very bottom panel out here, I'm taking a look at the ratio or the spread between the spot volatility index and its 3-month counterpart. If you look up in the upper left-hand panel, you'll see I've got symbols for the 3-month, the 6-month, and the 1 year. The spot volatility index is trading above all of those. So we could use any of these. And what you're looking for is the ratio of 1 is when the two equal each other. So obviously when the spot volatility index is above the 3-month or the 6-month or the 1 year out there, all we're doing is dividing. In this case here, you're going to get a figure of 1.07 because the spot volatility index is above the 3-month. Now, that was one point. The last time that we had this situation unfold was back on June the 11th. Now, you're looking at a daily chart out here, and on the very next day, price got back below that 1 level, that 1 ratio level. And that really is what set up the bottom signal for that run that we had higher into the early part of September 2nd, September 3rd out there. So you'll want to watch for that as that starts to unfold out there. Not something that you'll play today, but knowing the pattern out there should be able to assist all of us with regard to being able to understand the type of bounce that we should see. Now, we won't see that until we start to see that spot volatility index turn down, but that's something that I want you to pay attention to, or you should pay attention to it. The last element before we get into some of the requests that are out here is take a look at the New York Stock Exchange. So back to that spot volatility index one-day rate of change being above plus 10. If we take a look at the advanced decline oscillator now for the New York Stock Exchange, we're down at minus 250. When you get to minus 150 is oversold. So now we've gotten down to in the extreme oversold. Not that it can't get further oversold. But again, this too talks about or discusses some type of a decent rally that should unfold. So we want to look for the signals, knowing the spot volatility index, how that plays out, and using that as a great tool to help us in being able to interpret the message of the markets out here. And it's really helpful knowing that it's just short-term volatility, which makes sense, obviously, election and stuff that's going on out there. But I lost my frame of reference. So you should have a pretty good picture here as to what to be looking for and what to expect. And again, the what to look for, we'd be looking for the short-term time frame bottoms to generate signals. Then we'd look for resistance levels to fail, and that would tell us about a significant counter trend rally that we're to follow. All right, we've got a caller on the line, so we have call ahead seating. Let's go out to Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you?
I'm good, Steve. How are you?
Very good. Thank you very much for asking. And Amazon is what you'd like to look at. So tell us what you're doing and how we can help you. Currently trading out at 31.73. So, Jim, take her away.
Well, I had bought just 2 shares back a while back at 31.32.82, and I just want to add to the position, and I was thinking that 31.23 might be a good area to purchase more if it'll get down that low. I'm not sure it'll get down that low. Just wondering what you thought.
Sure. So if we take a look at the profiles and we try to use those as a potential area for support and an entry point, it's not that far from where you came with. The bottom of the daily profile is 31.30.62. Now, price is trading into a swing point that had traded down to that profile. That was a swing point from the trading session of October 22nd. And that had volume of 4.2 million shares. You're already at 3.4 million shares. If Amazon closes below 31.98.75 today, Jim, what that is suggesting to you is that price would get down and test the bottom of that profile, or at least probably the bottom of the swing point, really is what I should say. But certainly the profile and the swing point is at the 31.21.94 level. So because you're looking to add to that position, let this play out and see how that unfolds. If price doesn't hold 31.30.62, then the message would be to look for a pullback to about 30.20. And that's the bottom of the weekly profile, which is a bullish structured profile. And that's where you'd prefer to add 2 more shares out there. But the first level is going to be 31.30. Now I'm going to open up my other charts out here. And let me get to the daily time frame. And I see I've got to populate this. So let me get that function key going. Did I hit the right one? I know I'm really talking to myself, Jim. I know I should be talking to you, and I don't know why this is not. I don't know why this is not populating. So, my system is just. I had problems with the system yesterday, and I'm having problems with the system today. But that's okay. We're going to load this thing up here. So let me get my template. So I get all those tools on here, and okay. So we understand why Amazon pooped out where it did, and that's because price was running into a TD 9 count breakdown level, and that was on the trading session of October the 12th. So ran into resistance there, and another level that this could be pulling back to would be 29.96.67. But you're going to have, you'll have a better feel at around the 31.30 level. I'm just looking to see if there's anything else out here that you've got to be aware of. And again, I don't know why these templates here. But there's ghosts and goblins clearly running around. They're not in my head. They're on my screen. I hate that. The weekly is suggesting to us that, it should continue to pull back. So I've given you some information. What additional questions, or what if I don't want to confuse you on anything, what additional information can I look at for you, provide for you? What questions do you have?
No, I think that's great. I was watching you yesterday when you did have some technical issues there. That was pretty wild.
And Jim. They didn't stop. They didn't go away. That was the bummer. It was like they persisted. So finally, I had to shut things down last night. But in any event, out here. So all right. So look, stick with Amazon. Watch that 3130 level. And thanks for your call. Always good to speak to you.
Thank you. Bye bye.
You bet. That was Jim in Palm Harbor. See Rhodes with TFNN. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we got a couple of questions that are in the queue. Let's get to those. The first one coming from Mike in Sarasota. I want to take a look at Visa, currently traded out at 180.92. It is past the 1-to-1 A to B equals CD to the downside price projection. So it looks like what Visa, let me see if I can do this here. Okay, got rid of the A to B equals CD. I want to make sure we're just looking at the right A to B equals CD pattern. So look at the A to B equals CD down pattern. And so the D point was made with a wide-ranging bar, Mike. You got this gap that's out here today. If you just fill in the gap, not clearing, if you fill in the gap out here, you'd see that it's a wide-ranging bar. That's not how D points are made. We're looking at the D point. We're trying to find where's Visa going to make buy the D point, which would then confirm the Gartley buy pattern. And Mike, I don't know the answer to that. I just know that the way that it's trading right now, it wants to head to lower price. Its next price projection areas are 177, 168, 159. We use those as guidelines, not as right to the tick or anything. Does price have to get there? No. What has to unfold in order to get a buy the D point, the first thing that has to unfold is you need to see a bullish reversal candle. So until that happens, Visa would not be giving us a bottoming signal. Now, if we go back and take a look at profiles, well, price is below the weekly profile out there, so that's not good for it. But we already know that it's not good. Just take a look at the daily action. And right now, price is getting inside the monthly profile out here. So when it's inside profiles, such as the monthly, if it closed below 187.05, that consolidation could take you all the way down to the 140 level. Let's pull over my other chart to see if there's any other patterns that are out here other than the A to B equals CD pattern. And voila, there's not. So I don't have any kind of bottoming signal on the daily time frame. Hard to believe, but Visa doesn't have another breakout support level. So if it doesn't form an A to B equals CD to the downside, Visa is telling you it's ready to go down to the March lows. So that's really interesting. That's looking at the daily time frame. Let me see if there's okay. So weekly, here's a level of support to the downside on the weekly. That would be 159.15. But really, that gets you back into the March low. That gets you back into the March low. Interesting. So here's the A to B equals C. I can't do it on this one. I have that pattern out there. Yeah, Mike, this looks like, and you've got a confirmed Rhodes momentum indicator top from last month, and now we get follow through on the monthly basis. And so if you're asking where is it that Visa could head to, maybe Visa is giving us a signal that, okay, markets are getting ready to head back to March. That'd be 135.26. That was its monthly TD9 breakout level that held then. Maybe it would hold this time. So at this stage here, the way that you play it, there would be a confirmed Gartley buy pattern if there were a bullish candle that formed, over the next many sessions out here. So that's what's going on in the case of Visa. You also want to take a look at Twilio, TWLO. And Mike, I didn't take a look at the detail. I went back, looked at my laptop to see, the symbols that you had requested. I didn't get a chance to really read through it, but I'm just looking at where the charts are going. From there, you can go ahead and make your decisions. I think in any event. So Twilio right now, yesterday closed below the bottom of its daily profile. Today could be a second close. That level is 288.25. When you close below a profile 2 sessions in a row for their time periods out there, like a week would be 2 weeks in a row, a day, 2 days in a row, tells you of a change in trend. Now, Twilio had a big breakout. That's what it's trading into. So it's not a TD9 breakout. It's just a breakout with volume, accelerated volume, wide price spread. And that was on the day of October 2nd. So there could be some support between the 272 to 295 level out here. It's above daily profile, it's above weekly profile and above monthly profile. So Twilio looks much better than Visa does. But let's simply go take a look at the Twilio stock chart. So this is interesting. So if you take a look at Twilio, it respects the TD9s. And so, Mike, you'll use that to your advantage. What do you mean it respects the TD9s? The bottom that formed on September 17th in Twilio was a TD9 count. The top that formed in Twilio was a TD9 count on October 13th. In between that, there was a TD9 count that unfolded on October 2nd. That was one hiccup day out there. Maybe it was a 2 hiccup day out there, but barely nothing. When you close above the high of the TD9 count and you do it within a few sessions or a few bars out there, tells you about a momentum move to the upside out there. In this case here, it would be telling you, hey, not to be short. Now, in the case of Twilio, and the reason I bring that up, but today is going to be bar number 9 of a TD9 count. This is going to confirm a TD9 count above TD9 breakout support. 270, 250. Now, not that there can't be a lower low tomorrow, but Twilio is looking like a buy, a tradable buy, knowing that you've got resistance at the bottom of that profile and certainly up at Stevie's green line at the 310 level out here. Likewise, it respects the 9s. Remember, in between the bottom and the top out here, there was another 9 count that just simply I just had a hiccup. Well, if you see that same pattern unfold inside of Twilio, Mike, that's telling you that I'm getting ready. It's getting ready to head down to the 222 level out there, room 222. What was the name of that actress? Diane Carroll. I am amazed that I could remember that. I have no idea how I did that. Because when I asked the question, I didn't know the answer. I was actually asking the question, but I think it was Diane Carroll, wasn't it? Room 222 out there. Karen Valentine. Well, she was in it too, right? Wasn't Diane Carroll, wasn't she the teacher in room 222? Mr. Bill? I don't know. Maybe Mr. Bill will probably fill me on. It is a miracle. It is a miracle that we keep that kind of stuff in my head out here. In any event, the weekly time frame chart here, you've got a confirmed Rhodes momentum indicator signal, and this says price could pull back to the 187.50 level. So you've got competing patterns out here, Mike, but watch the daily. That should give you. Now, the weekly really kicks in if price just simply closes below the bottom of the TD9 count, which wouldn't be necessarily today's low. Could be today's low. We have to see tomorrow's candle. So I hope that helps you out. Thanks so much for writing in. And let's go to our next question. Next question coming in from, let's find out who. This one coming in from by email as well. And this is coming from Jerry. So Jerry writes, and he wants to take a look at a couple of symbols out here. So we'll do that for Jerry. CDE out here, looking for an entry into CDE and GFI. And Jerry goes into some discussion out here. But what I'm going to do, Jerry, as opposed to read your discussion, just go into the charts if that's okay with you. And and I guess you just said yes, that's okay with me. But maybe he didn't. So CDE mining out here, terrible day. Volume to the downside, trading into a swing point that has less volume. The volume that it's trading into is the swing point from September 24th, 5.7 million shares. You're at 6 million shares. So, Jerry, sit on your hands. You're looking for an entry point. It's not today, that's for sure. Price likely to go at least test that low, 656. Is that your entry point? I don't know. Price right now is trading below the bottom of its weekly profile out here. This is telling you about an intermediate term time frame change in trend. You say that one time in a row and see if you can get it. It's a tongue twister. So that's not looking good. Where it closes tomorrow might in fact be a real important thing for you to be looking at out here. Now, we'll pull over my other charts out here. We'll look at the daily and the weekly. And on the let's get to the daily first. On the daily, we're just looking, is there any other support levels for you to pay attention to? Yeah, there's a support level, and it's down at $5.38. So between 466 and 538, that's where it looks like CD is headed to. And we'll just simply leave it at that with regard to its price projection level. So, Jerry, when we get back, we'll go take a look at Goldfields, GFI, when we get back from this break. Steve Rhodes.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 816, S&P off 100 points right now. Jerry wants to take a look at ticker symbol GFI. That is Goldfields out here. Again, Jerry. So, Jerry, I did read your email in detail during the break. Our TD9 levels, you're close, but they're not matching up. So, but you're close. So, and you should have seen the TD9 breakout level on the chart we looked at. I don't remember who it actually, I don't remember which one it was. So Courtaline, CDE out here. So take a look at Goldfield. So here you've got, this is an interesting chart setup, and maybe you're going to know more tomorrow. I think tomorrow might be the time period out here. So today, price is below the bottom of a bullish structured daily profile and below the September 24 swing point, where CDE had volume. Goldfields does not. The volume that it was going against was 6.9 million. You're only at about 3 million as we speak right now. So it's light in the loafers on volume. That doesn't mean that it can't go further. What it doesn't have at this stage here is the confirmed A to B equals CD to the downside. That doesn't mean that it won't go ahead and make an A to B equals CD to the downside. So as long as price closes below the B point, it's trading below that. That's 1101. Then this sets up a Gartley buy pattern in the 932, 826, 692, in that general vicinity. You'd be waiting for a bullish reversal candle to confirm. So that's the message. Even though you've got you're passing a B point with lighter volume, you want to wait to see if that Gartley buy pattern would form. And now what's interesting about this, and you'll see this when I pull over the next set of charts, but right now on a weekly basis, price has made its way back to support, 1077. So there's a possibility that this 1077 level will hold. The reason why I think tomorrow, and that's a weekly chart, so that'd be saying, hey, tomorrow you should know more information. If price closes below the bottom of that profile, obviously you need two closes below, but it would be signaling, hey, I want lower price based on what we just looked at on the daily chart. Where you really get that information tomorrow is if tomorrow's close is below today's low. I don't know what today's low is going to be out here. And the reason, Jerry, why we say that is when we take a look at the charts out here, you're doing great on your TD9s out here. You know that yesterday was a TD9 count, but it wasn't the low of the pattern because that came on bar 7. That's why today is so important, because that bottom can form on the bar following bar number 9. Yeah, that's a beauty out here. So that's where you'll really know more. If price closes below the bottom of that weekly profile, closes below today's low out there, it's telling you about a significant move lower. Otherwise, this could be some type of buy point, but it may just be for a counter trend rally out there. And 1082 is support. You're trading at 1074. That's my TD9 breakout level. I believe you had one below that. 912 is another one. 750 is another one out here. I would say I think you got to wait till tomorrow and see what kind of information that we get out here. So I hope that helps you out, Jerry, with regard to GFI. Oh, I did open up the weekly. We probably should do that just in case there's any piece of information here different that we need. And there's not. So 715 is the price projection area for GFI if it closes below that weekly profile 2 weeks in a row out there. So be patient out here, Jerry. I hope that helps you out with regard to those two symbols. We've got a question here coming in from Pradeep. And Pradeep wants to say, you get my emails. So this is really more of a newsletter than it is. So Pradeep, I hadn't, but I see this one, so I'll make sure that I respond to your email. Thanks for following up. Okay, so we've gotten through all of the questions at this stage here. 877-927-6648 is where you can reach out to me. Let's go back and take a look at the short-term charts out here, just see what has transpired, and then we'll go back and like we do with the ES, I want to do this for you with regard to the NQ and the Dow out there, and the Russell 2000 to the extent that I can. So I'm just looking at that short-term time frame chart out here, and yeah, that TD9 count pattern didn't hold out here. So the NQ trading in the resistance, the bottom of its daily profile. Next resistance level is 11,242 on the bounce. Then you still have those profile levels of 11,271, 11,297 to make a decision should price get up to those levels. But we don't have any kind of no bottom signal here in the NQ, even from a short-term standpoint. Different message still inside the ES. Looks like that TD9 count pattern has held up. Boy, the ES, the 30-minute traders inside the ES are really trying to signal to you that it's trying to form some type of bottom, but it just can't. That selling pressure, it's just too intense. Now, I'm not talking from a volume standpoint, but we just simply utilize Stevie's red line out here, green or red line, the oscillator and change line. Really an extraordinary tool, folks, an extraordinary tool. And I do hope that you use it and you take advantage of it. I know that Jerry is. He's looking at setting up trades based upon that. So that's a beautiful thing. 3286, 3287 is the area where the ES Mini would have to close above on a 30-minute basis. And if it does that, then that would be generating that signal of 3304 to the upside. So not seeing that the Dow has done the same thing as the ES. So again, it keeps signaling that it's trying to form that bottom. Now, the cool thing is that if these candles that have formed on a 30-minute basis, a couple of hammer candles out here. The last candle that came in at 1:30 was a hammer candle inside the ES. The one about an hour and a half before that was a bullish engulfing candle. The TD9 count is still in play out here, but again, price struggling at Stevie's red line and still doing the same as we speak at 1:48 out here. So nothing has really changed inside the short-term time frame charts. Okay, so that being the case out there, let's go take a look at the larger picture. The larger picture here for the NQ, and the easiest way to do that, in my opinion, for you to be able to get a glimpse of it. Oh, we did this. Did we do this? No, I think we did it for the ES. If we did it, I apologize. We're going to do it for the NQ again, if we did. So I can remember Diane Carroll, but I can't remember what we covered 30 minutes ago. Yeah, I hear you. I hear you loud and clear. Hey, look, if the NQ closes below the bottom of its daily profile today, don't know if it will, 11,302 is the number. We'll find out soon enough. Then that suggests, and if there's a second close tomorrow, that suggests price pulling back to 10,815. That's the bottom of its weekly profile. 10,697 would be the center of its monthly profile. We'll deal with the weekly profile first. Okay, let me open up and take a look at the Dow equity future contract below the bottom of its daily profile. Did that a couple days ago. Now below the bottom of a weekly profile, 26751, and trading below the center of its monthly profile. So the Dow is generating the signal that it wants to pull back to 23,483. That's its message to us as we speak right now. Tomorrow's close on the weekly basis will be the important close, today's Wednesday, Friday's close. Look, not only can't I remember something I talked about 30 minutes ago, I can't remember what day it is. And I just think that's a whole COVID thing. I don't know. In any event out there. So to give you, gold. Let's take a look at gold as long as we're here. Gold. We'll do this with gold and silver. Here what we can see is on the very left-hand panel, you see gold trading in between trend line support and trendline resistance out there. So really in a wedge, but more important, it's trading in between profiles, 1862.80 and 1922. Don't know which side is going to win out there, but it closed below 1862. Well, that would signal a move back to the 1804 level. See Rhodes with TFNN. Be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's immediately go out to Michigan and speak with Gary. Gary, thanks for calling. Thanks for holding. How are you doing today?
Great, Steve. How about you?
Very good. Thanks for asking. And you are the silver man out here, so I know you want to talk about silver. How can I help you?
Well, look, if you, I know it's quick and it's at the end of the show, but if you can just maybe get the OCL lines and basically any targets up or down on silver and gold.
So I think I'll get you those oscillator and change line levels, but we're going to focus on this chart here because I think this is the chart that's going to be most revealing to each of us. So silver so far this week has traded down to a low of 23.06. And the very right-hand panel of my chart is the weekly time frame for silver along with its profiles. And it's a bullish-structured profile, and the bottom is 22.87. So price is trading inside that strong support level. Now, it's held over the course of the last month and a half out here. I don't know if it'll hold this time. If we did see a close below 22.87, Gary, that's telling us that silver's going to trade lower. Lower to where? Well, profile-wise, 21.08 would be the next area, be between 21.08 and 19.35. So you've got silver that is pulling back into a weekly profile. Yet if we take a look at the daily time frame out here, there's no signal of any kind of a bottom out here. The oscillator and change line is at 19.02. Price has been vacillating back and forth on the oscillator and change line daily time frame for both gold and for silver out there. So I don't need, there's not a whole, I just gave you gold. I'm sorry. Silver is what you were looking for. That number is 24.33. My apology. But really the same thing. Silver been oscillating back and forth out there. Support, another area of support would be 1980 to the downside. But Gary, I think just stay put right now, but know that you're up against a key area of support that is held. Don't know whether it'll hold or not, but we're done with the show. Does that help you out?
Okay, that was great. And then maybe tomorrow you can hit gold. But yeah, I've got some puts against the market too, just for hedges. So Thanks for everything. You're great, and great job. Bye-bye.
Thank you.
Be well.
Hey, folks, stay tuned for the next couple hours. Great shows coming up. Have a wonderful Wednesday.